Yo, hello everybody. What's popping? It's Zach here, and today we're gonna be analyzing gold, XAUUSD. Alright, guys. So I wanna apologize first because there's a road just nearby my window, so there'll be vehicle sounds because vehicles are passing by. I hope you don't mind that. Anyway, let's get to the content now. First of all, I want you to all know that gold is a very volatile pair, and you have to be very careful trading gold. You have to use proper lot sizing, proper risk management, because you don't want to mess with gold, guys. Gold is it can be dangerous if you don't know what you're doing. So anyways, let's get into it, and we'll get to know more about gold, trading gold, as far as we proceed in the series of weekend review, market weekend review. I'll be doing weekly forecast from today henceforth, so you guys will share a lot in this journey together. So when analyzing gold, I normally like to start from the weekly time frame, because gold is a pair that respects from the weekly setup. It respects the weekly highs and lows, the daily highs and lows, and it also respects the smaller time frame patterns. So I want to show you how I normally analyze gold, and I hope you guys will benefit from this. So just a bit. Okay guys, allow me to pause a bit because it seems my internet is back, and sorry for that inconvenience. So I was saying that I normally like to analyze gold from the weekly time frame, because I know that gold normally respects the weekly highs and lows, as well as the daily highs and lows, and the smaller patterns in the smaller time frames. So we wanna first mark our most high. You grab our horizontal line. We first want to mark our highs. I normally like to put my horizontal line at the body close, just for accuracy. So you see, this is just like marking support and resistance. So this is what I normally do with gold on the weekly time frame. I first identify my key zones. Some may call it support and resistance. Yes, it's support and resistance, just basically levels where gold normally likes to bounce. So we want to observe a tendency that gold has had in the past. If you look well here, gold has it created a support here, it broke these highs, it came back to the support and bounced again. You see, it respected that particular weekly low. It came back, created a support here, again here, fell to break below, and then where did it go again? It went to the particular highs. That's why I said I normally like to highlight my horizontal line at the body close. You see here, I could have highlighted here, but this body close normally gives a lot of precision. That's why I like to do that. So if I take my crosshair, let's just see. It may have slightly come towards the actual high, but it didn't really do that. So when I look to my left, you can see here at the body close, you see it was very precise, because if you were aiming for that from this point, you actually knew that at this point the market was most likely to reverse. So yeah, let me go with the crosshair. I normally don't like using it, I like using the arrow. Good. So once I have marked my particular weekly highs and lows, I normally go to the daily time frame, just to potentially see the candlestick patterns that are being presented, because for candlestick patterns, the higher the time frame, the more likely or the most accurate the signal will be. So if you see something like 3-bar reversal pattern, when I say a 3-bar reversal pattern, I mean something like this, where you see a bullish candle like this, then some sort of a hammer, then a bearish engulfing that actually engulfs the hammer. When it appears at a key zone, it means that the market is ready to actually reverse. So those are some of the patterns that I like watching out for. So at the daily, I just want to see what are the daily key points. This is because they will help you get the precision. I normally like using the horizontal rays for these particular types of points. So for example, here guys, we can see that the market bounced here, it created some form of support, and then when it broke here, you see it tested this point, then continued to drop up until our weekly support. Yeah, so we might as well just get a re-entry around this point because the market has closed below this point. We are waiting to see some bit of movement to the downside, then on the retest is when we shall be looking to enter this market. So but it's not yet confirmed because it could also be supporting here. What we need to do is validate our entries with patterns. Now for those who know the patterns that we trade in forex, I normally like the bullish channel, the bearish channel, and then we normally have the wedges. We have a falling wedge and then we have a rising wedge. So for this particular time, I'll be showing you these patterns the more we go on, and then I normally like to combine the smart money concept of imbalances. I'll explain those concepts later, how they work, how I use them for my entries and all that. For now, just be with me stick with me to the end so that I can show you everything, how I normally analyze these charts, how I normally enter my trades, and how you can as well use some of my tips to actually develop your own strategy. Yes, so make sure that you normally make backtesting a habit. It's gonna be good if you backtest during the weekends, just to understand what the market has been doing previously and what it's actually gonna be doing in the next few weeks or few days or few months or even few weeks. So let's see what the market did over here. Yeah, sorry about that. Okay, there is no right or wrong way of drawing trend lines. As long as whatever you've drawn makes sense, it's okay. Okay guys, okay, so we can see this point here. This is a channel, this is a bearish channel, and we will have looked to capitalize from this channel. We will trade the breakout. You see, normally when the market makes when you have a channel and you have a first touch, second touch, so our first touch is here. I want you to understand properly. This here is our first touch, this one here is our second touch, and then we had a breakout at the third touch. So at this point, this is the point where we are looking forward to now start seeing buying momentum. We want to look for bullish entries. We want to be on the right side of the market. I don't like trading against the trend. The market had been going down. You see here, it started to actually form lower highs and lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower high, and then you discover that it started to somewhat consolidate at this point. Not exactly consolidate, but the market started to bounce at this point because it had created a support zone. So this one is a support zone. Let me mark it with my rectangle here. As you can see, we would have started to anticipate those buying momentum, but entering here would have been risking because one, you see this is a daily time frame. Two, we wouldn't have entered this market because we didn't actually have a clear pattern to help us enter. So we would have waited to see if the market will break out. When I mean a breakout, I mean we want to see a candlestick close. Let me do this. You can see if I zoom in, this candlestick, the body closed outside of the trend line. So and then this other candle confirmed for us that it was actually a breakout. So normally I like to enter during such breakouts, but I normally like to dive into the smaller time frames so that I can find the patterns which can help me to get those accurate entries. So when entering, if you had entered on the daily time frame, unless you're an investor, it would have been really, it would have been a very huge risk, because you would have looked forward maybe to enter there. Your targets would have been all the way to the weekly resistance. Remember, I used the red lines to mark my weekly support and resistance so that I can be precise when making my targets. So you see, if we had decided to enter on the daily time frame, yes, the market will have gotten to our target. This is called the 90% rule, guys. When the market breaks out of this point, we are looking forward to seeing it fill up to the first point where it started, where the movement started. So this movement from here to here is what we normally call the 90% rule. That's how I normally analyze, that's how I normally target my take profit zones. And my stop loss, you see, I will have used the recent low, but now this is the daily time frame. You don't want to be risking this huge, even though your risk reward will have been 1 is to about 4, 1 is to about 3.5. That means that basically you will be gaining 3.5 times whatever you are risking. The amount you are risking, you will have gained 3.5 times the amount. So this was what the market did during the previous weeks. The market, the momentum was bullish, but then we saw the market hit our very crucial weekly resistance. So that means that we are supposed to be focusing on finding a pattern that will tell us the direction that the market has taken. So I would love to delete this analysis so that we focus on what price is currently doing, because we are aware we are at the weekly resistance. We've already hit our weekly resistance. The market is most likely to reverse, guys. So we want to see if we can, if we actually have patterns that are giving us sells instead of buys, because we know if the market gets the resistance, we want to be seeing sells, but we don't just decide that it sells. We want to find patterns that will validate our entries. So let's analyze and see what we have here. Actually, we'll start drawing our trend line from there. Let's cater for these lows. Yes, guys, you can see so far so good. Remember, we said that there is no actual right or wrong way of drawing trend lines, so it just depends on your preference, it depends on the skill, and it depends on the patterns that you trade. So for me, this one would have been my actual this one is my actual setup actually. So what I'm seeing right here, guys, this is a rising wedge, and a rising wedge normally we expect for sales to ensue. So we've noticed that there is a daily key zone around this level, so I'm just going to mark this level, yes, with my particular rectangle. So yeah, guys, we've seen that the market has been doing some form of, it's been giving us some form of projections at this point, at this point, at this point, at this point. It was now support turned resistance. At this point, the market kind of resisted but broke out, and then it fell. At this point, you see some sort of reaction, and then we're still at this point, guys. That's why I was saying I want to see if my sales will be confirmed. I first want to see the market break out of this particular point. I want to see some type of pattern coming to this level. and then I'll look for sales all the way to the downside. I'll be targeting all the way to the downside. So yeah guys, let me just undo this really quick. But I hope you've seen that for the next few days or weeks we might be experiencing sales, because overall we see guys, this third touch breakouts, they're normally high probability for me, high probability setups. When I see this as the first touch, this as the second touch, and then this was the third touch, but the market broke out. So at this point I'm expecting that the sales are highly probable, but I'll just be reacting to what the market will be showing me, because I don't know for sure. I'm waiting for confirmations before I can enter my sales. So let's dive into the H4 and see what are we seeing on the H4, the 4-hour time frame. What's it giving us, guys? All right, so on the 4-hour time frame, this is my setup on the daily. I can now see it on my 4-hour time frame. So yeah, the breakout has occurred on the 4-hour time frame as well. Seems to be selling, the market seems to be selling nice. What I want to see though, guys, you see the market has created some sort of this is supposed to be like a reaction level, like a hot level, whereby when the market gets there, it has the possibility to bounce, because we saw from previous data the market actually bounced here severally at this particular zone. So we might see several bounces before it actually break out. Ours is to find that pattern, that small pattern that will be leading us. Sorry for these, never mind. Pardon my network guys, it's slow. All right, good. So we want to be seeing this market actually give us a pattern before we enter. So let me see. I wanted to reset this trend line. So that it stays visible on the daily time frame only. So don't get confused. All right. Now from the H4 perspective, we see we had some sort of a support structure. So I want to be seeing the market drop the downside, but let me see first. Yeah guys, so we definitely have our touches here. The market had broken out, so we know the momentum is bearish. So we have our first touch there, our second touch there on the trend line, at the third touch, because the market is in a bearish momentum, so we would expect for this particular falling trend line, we want the market to reject and fall further. So if you see here, the market actually rejected this point and actually dropped. So I don't know what the market is going to do this particular week. What I can say is most of you guys, not most of you, but all of us will avoid trading on Mondays, because on Mondays we actually want to see the market give us direction. We want to see the market give us direction. So my anticipation is that the market might come there, then give us a rejection before we see further downfall. We see further push to the downside, then maybe we'll have a retest there, then continue further to the downside. But as it stands, my bias for the week actually, guys, it sells because I'm anticipating this particular retracement back to that zone, because I'm seeing an alright, I'm seeing some sort of imbalance. Those of you who know what imbalances are, you see, like right here we have some clean imbalance that's not actually been filled yet. Even though I understand we had some tap-ins here, but maybe on the smaller time frame we could see that imbalance more clearly. Alright, yeah guys, we actually have an imbalance here, so you can see points like these. The market might come and tap in just a bit, then we can see it continue to fall further. So what I'll be looking for is a nice pattern that will give me an entry, probably something like this. I don't know if the market will bounce. Then once it breaks this particular trend line, and having rejected my particular H4 zone, I might be interested to take shots, but I'll just see what the market will provide so that I take my sales afterwards. Meanwhile, what it is, we are actually looking for sales. We're actually looking for sales, guys. So whichever strategy that you trade, I don't know about you, but I feel like sales would be more valid. I guess we'll see. The market could actually come bounce off this trend line, then drop further, or it could actually come and give us a touch somewhere here, which will then allow us to adjust the trend line, because we will know it's not a breakout, because the momentum right now is actually bearish. We have several confluences. The first confluence is that, guys, we are coming from the weekly resistance. Coming from the weekly resistance, we are looking for sales. Second confluence is that on our particular weekly trend line, not trend line but channel, daily channel, we see that we have broken out from the bullish channel. Now we are expecting more sales, so we are going to stick to sell entries, sell type of trades. We don't want to be trading against the trend, guys, because it can be messy. It could be very messy. Yeah, there's an imbalance here, so it just supports my theory. On Monday we could actually come to feel this imbalance right here somewhere, maybe tap somewhere here for the next few days before we continue to drop. So whatever you do, guys, just stick to sales. Yeah, that's what I can say. And I'll keep this short. Today's analysis, I'll only cover gold. I've only covered gold because I don't want to keep the video too long. Also, let's take it step by step. Let's see the acceptance, the reception of the weekly focus on the YouTube channel. If we get more likes, if we get more subscribers, definitely, and more views, definitely will be doing more pairs. If you think there's something else you want me to do, just drop your comments right below and I'll definitely go through them and put your thoughts into consideration as well. Thank you for watching, guys. This is ZachFX signing out.